I think they're a little bit too pessimistic. Look, there's been a lot of pessimism about the economic outlook, about the financial outlook since the beginning of last year. I have said that I think we're in a recession. We've been in a recession since last year, but it's a rolling recession, and it keeps rolling in different industries. And all in all, it isn't adding up to an economy-wide recession. I think when it comes to Jamie Dimon, he started last summer warning us about hurricane and how his bank was becoming more conservative, more careful, and advised investors to do the same. Well, June of last year, we made a low, and then October of last year, we tested that low, and it basically held. We were only down 2% below that low, and the market's been doing fine then. So I just quibble with the fact that somebody as influential as Jamie Dimon has been promoting pessimism when what he really should do is just focus on his bank results, and they were spectacular at the end of last week, just totally at odds with his pessimism.
I mean, maybe we should have listened to him, though, more closely when he said months ago that a hurricane was coming. And, well, you know, maybe he was wrong on Mother Nature. I mean, maybe it was an earthquake, and that was in Silicon Valley Bank, and it could have been much worse.
As I just pointed out, he has talked about a hurricane. I think it was on June 1st of last year, and I think it was something around the middle of June that the market made a low. Then it had a rally. Then it took a dive on Powell's hawkish stance at Jackson Hole. But the October low wasn't really much lower than the June low. So I think if anybody listened to Dimon and got out, they've missed a pretty good recovery in the market.
You think earnings, by and large, are going to be better than most had expected coming into the season?
Well, I'm like everybody else. I was very surprised by the strength of the bank earnings, but it turns out that they're able to raise their deposit rates and still come out with increasing net interest margins. So I think that's really quite an achievement. And meanwhile, loans are an all-time record high. So that's weekly data. So we have yet to really see the credit crunch that has been much feared. And yes, the bottom line is, I think instead of maybe earnings being down 5 to 7%, they might be down more like 4 to 5% in the first quarter.
You know, I mentioned at the very top of our program about 30 minutes or so ago this new note that came out from J.P. Morgan's Marko Kolanovic. Because you're talking about making that low last October, which you think will hold, I want to read you and reiterate for our viewers who may not have caught that exactly what he said. In terms of whether a soft landing is going to happen or not, and even if it does, what that means. On the downside, even a mild recession would warrant retesting the previous lows and result in 15% plus downside. You just take issue with that out of hand?
Well, that's his opinion, and I've got my opinion. It's not something where we're battling each other. There clearly has been a tug of war between the bulls and the bears. I've been among the bulls, especially in late October. I thought that October 12th was the low. I thought there was way too much pessimism, as much pessimism in some of these surveys of confidence about the market, about as much pessimism as we saw back in March of 2009. And surely things aren't anywhere near as bad as that. And so it's my opinion that we're not in a recession, and we've been in what I call a rolling recession. I'm somewhat encouraged that the Fed staff is calling for a mild recession in the middle of at the second half of this year, because I don't think it's going to happen. So from a contrary perspective, I feel relatively safe with that.